Dave Ramsey, I think you are wrong. And let me tell you why. So Dave Ramsey is saying he doesn't think real estate is going to take a hit. He thinks real estate is going to be maybe a minor little hit, but not a big hit, which, by the way, he may be right. However, there's one data point you have to look at, whether real estate is going to take a hit or not, because that's where his argument is. His argument is, how is real estate going to take a hit if inventory isn't there? Well, if inventory isn't there, guess who's right? Dave Ramsey is right. Why? Here's why. Because say I'm a realtor and Adam is looking to buy $1 million house, okay? And he specifically wants to buy this house in a community that is close to the school because he wants his cats and his kids to go to a nice private school. But the challenge is there's only $2 million homes in the market. One of them doesn't have a swimming pool. The other does have a swimming pool. He wants a swimming pool. One is 4-bedroom. The other one is 3-bedroom. He needs 4 bedrooms. So I go there and I say, Adam, I don't think we're going to make $1 million offer here because you're not going to get it. He says, what do you mean? I said, if you try to negotiate hard here, you're going to lose because they're going to get 50 offers. I say we go strong. What are you talking about? I say we go with an offer of 1.15. Pat, it's $1 million listing. I say you offer 1.1, 1.15 if you really want this thing. Because if you don't, it's going to go cash is going to come in 1.2. So Adam's now panicking. And by the way, my argument as a realtor in that situation, guess who's right? I'm right in that situation. And Adam sits there and says, what? Damn, this guy's right. Why? Because he goes on Realtor every day and nothing new's popping up. Yes or no? When you're looking at houses. Right. So Adam says, okay, Pat, I'm not going to make an offer of 1.15, but I'll make an offer for what? $1,085,000. Okay, great. He puts the offer for $1,085,000. We send it in. Their realtor comes back saying, we got 47 offers. The biggest one is 1.11. This is your last chance. What do you want to do? I tell Adam, if you don't get this, there's probably not going to be anything for another year or two. Adam comes back and says, let's make that offer 1.16. He loses at 1.17. Okay? Today, if inventory was 50 for the $1 million house and 30 of them had a swimming pool with 4 bedrooms, guess what Adam's now doing? Adam's saying, make an offer of 880.
Yeah.
Make an offer of 90. I'm not making no $1 million offer. There's 45 other properties I can look at. So here's what Dave Ramsey says. The housing market is not crashing. Sorry to end your fear porn party, but the sky is really not falling. It's definitely scary, and some of the things going on truly do suck, but the sky is not falling. And the way he's explaining it is the fact that the inventory is not there. Now pull up the data I just sent to you from Realtor.com. This is Realtor.com article, okay, and it shows what's happened. Go up a little bit and then zoom in. Go up to the chart and then zoom in. Zoom in. Okay, check this out, guys. Look at this. Go a little bit out. Okay, there you go. Watch this. So active listing count, the years. You see the colors, 2017, 18, 19, 20, 21, 22. 22 is at the bottom. It's the yellow one. You see that? Okay, so inventory, active listing in January to February, it goes down. February to March, pretty even. March to April, about flat. April to May, boom. May to June, boom. 18.7% year over year. This data increasing is the scariest thing for realtors, and it's the best thing for buyers. So if this thing climbs up, Dave Ramsey has to apologize to his fan base for getting this wrong.
And it's going up.
If this thing goes down, we will give Dave Ramsey a shout out for getting it right. But it's that simple. Folks, if there's any data you want to watch, pay very, very close attention to this. You know how you were going to shops and you didn't see any Rolexes for sale? Plenty of Rolexes for sale right now.
Right now, everybody's selling them. So
you want to buy Rolex, they're everywhere.
The first element is that right now, those people that partnered, maybe you and me, Adam, we partnered and we were trying to do a couple house flips here in South Florida. Guess what? The party's over. What are we saying to each other right now? Hey, we don't have deep pockets. We're not like BlackRock buying up residential real estate everywhere. Guess what? We need to get out of this now. The prices are flattening out. Interest rates are going up. We have to get out. We're putting inventory on. That's first. Second, there is unemployment that is starting to happen in key areas. That inventory is coming on market. And third, as soon as the price is level, all of the sidelines, this is the biggest group, Pat. People that were on the sidelines that was thinking of selling a house, maybe moving or retiring, going to a different area, they've been watching the prices go up. And remember, when prices go up like stock goes up, I won't sell it today. Maybe Apple will be $1,700 tomorrow. I won't sell it $1,700. Maybe Apple will be $1,800 tomorrow. You know, you get talked into the next level of greed. You know what I mean, Pat? The next 1%. Those people that were on the sideline are bringing inventory on the market right now because they say the party's over and I'm getting out. All of that is driving inventory. And by the way, the normal number one thing that drives inventory is job change. It's forced inventory. And that storm hasn't even come ashore yet. But if you want to do the real estate market like a hurricane map here in Florida, it's coming. All of this is driving inventory, and it has to drive prices down. So Ramsey and other people that are maybe living in denial and thinking it's not going to happen, not going to be so bad, it's going to bottom out right here. No, it's not. We got another 3/4 interest rate 2 weeks ago, right? Here it come.
Listen.
The interest rates and the layoffs are going to keep fueling it. Talking fast so I can get it done.
There's two camps here. Choose your camp. Choose your camp, folks. There's the one camp that's saying nothing's wrong. Everything's going to be all right. The house prices are not going to drop. Don't worry about it. Keep spending your money. Keep living your lives at the same exact way. That's one camp. The other camp is shit's about to hit the fan. Real estate's going to drop. Inflation's going to keep going up. Interest rates are going to go up. The next 12, 18, 24 months are going to be ugly, but it's going to be fine. It's not the end of the world. We'll come out of this in the next 2, 3, 4, 5 years. And then everybody goes back to business as usual. Here's the key about these two different camps. Whichever camp you choose, you just hope you're part of the right camp in 2 years. Okay? Because if you're part of the wrong camp in 2 years, you are not going to come out of this thing better than you were prior to this camp. So to the Dave Ramsey camp, look, go to the other part about the savings. These are a couple things folks have to pay close attention to. This is a WSJ story. Americans tap pandemic savings to cope with inflation. Okay, what happens when people start tapping into their savings because of inflation? They run out of savings. And then after they run out of savings, what do? They start selling things that they have. And when they start selling things that they have, what happens when a seller is selling something and he has to use that thing that he's selling to pay the mortgage next Friday? And you tell him, I'll wait 2 weeks. And he says, no, but what if we do a deal right now? No, I'll buy it in 2 weeks. No, right now.
You just screw them.
Listen, it's not screw them. It's not screw them. It's called being irresponsible. I've been irresponsible when I was forced to sell stuff because I desperately needed money. And the person that was responsible, guess what? That credit goes to the person that was responsible. There's nothing wrong with the guys that, hey, when everybody else was partying, you were saving money. Then when the time comes like this is the time when you get to buy things for sale while everybody else was buying $700 bottles and you were not. That's all there is to it. It works in your 20s, 30s, 40s when that age starts with 4, man. That stuff kind of changes a little bit.